Well, thanks so much for tuning into the trade setup today. I'm Niraj Shah. You don't need me. You don't need to hear what I'm saying today, right? Because the SGX Nifty is the panacea for all things. It's up and about. But let's try and talk a little bit about what should be top of mind. Viewers, you'll have to excuse me a little bit today. Due to some technical glitches, we are not able to completely show you all the data points or the reasons thereof. Actually, I'll be able to show the data points, not all the reasons thereof. But we'll still try and give you a complete synopsis of what's happened. So, first, remember all of last week I was talking about how the backstop to any kind of large trade downwards would be the stimulus. Now it may be the reason, may not be the reason, but you would reckon that because of that happening post market hours, Asia's had a good move today. So the House of Representatives passed that 1.9 trillion stimulus package. I think from whatever little I gather, and I'm no US expert, but from what little I gather, the bill is bound for a Senate split 50-50 between Democrats and Republicans, and the lawmakers will next week begin offering amendments to the House plan. So this is now moved to the Senate, essentially split 50-50 between the Democrats and Republicans, and therefore you don't know how does this pass. But from what little I read, I think the Democrats, who are in power currently in a slim majority in both the houses, are hoping to push the stimulus to President Joe Biden's desk by March 14th. So those are roughly the timelines. You would ask, why is this important? Liquidity. Okay, now again, the other reason why this is important is because it gives a bit of a sentiment booster to an index which was starting to look a bit edgy. So if you look at the MSCI Asia Pacific or the MSCI EM index, it will show you how it had come off and was trading very close to the support level. It fell below the support level, but typically in technical parlance, you wait for the index to trade for a few days below a level after determining whether it's below or can it bounce back. Now, be interesting to see what this trend line looks like in the next few days. But yeah, the Feb 26 drop sent it below the 50 DMA for the first time in a long time. So be interesting to see what happens to that. But like I said, Asia seems to be doing okay. ASX in the early risers was doing okay. China has slightly patchy economic data, and that might have repercussions on metals, by the way. So you have to keep that in mind. But Asia Pacific, whatever little was working, was doing okay. HSI about 1.25%. I think ASX was doing well, and the SGX Nifty, the last time I checked, was up and about, really. So you're probably looking at a bit of a zoom in the SGX Nifty. 222 odd points, right? The last time I checked. The only problem, viewers, I think with this is that we've had a bit of a false start last week before the markets cracked again, right? Can this time be different? Would people believe that this time is different? I don't really know. But for now, it looks like it's okay. So let me try, because I have a slight crunch today, let me try and show you something which tells you a bit about the chart. There is a lower top, lower bottom formation on the daily time frame, and therefore people should be wary about that. But here's a chart from a story that Dr. C.K. Narayan put out on our website. I would urge you to try and read that story a little bit, by the way. It's pretty fascinating how he's dissected the indices using charts, both large caps and mid caps. This is a weekly candlestick chart. It forms a bearish engulfing pattern, and therefore if you're strictly a student of technicals, you would believe that the markets are headed lower, and maybe not substantially lower, but a bit lower. However, the same story also speaks about how the mid caps and the small caps have a chance to do much better than the large caps. And frankly, for a lot of people, the year ahead is going to be the story of the mid caps and the small caps, as long as the large caps don't crack too much. And I think that's what all of us would be monitoring. Keep in mind, FI is at a very large sell number in Friday's session, but it'll be interesting to see what it does today. I think that's the mood point that I'm trying to make. Now, two things to watch today. One is the upcoming OPEC output meet by OPEC Plus, might matter for all oil dependent trades, crude oil dependent trades. So the upstream companies, the downstream companies, paint companies, all of these would probably trade more by virtue of what happens on March 4th as opposed to currently. But let's wait and watch. And of course, today is also the auto stocks monthly sales data. So some of the stocks could react on the basis of that. But that I don't know what the numbers could look like. The estimates vary for different companies. But I think I'll watch out for Escorts. I'll watch out for a couple of two-wheeler names as well. And of course, Maruti Suzuki remains top draw. But in terms of stocks to monitor today, I'll watch out for Apollo Tricode for sure. So what's happened, viewers, is that APL Apollo, the parent company of Apollo Tricode, has announced a restructuring plan wherein they are merging APL Apollo Tricode and one more company with APL Apollo. Now, as a result of which, I hope I can express myself properly. There is very limited use of charts that I'm making today, but every shareholder of Apollo Tricode, which is priced at about 930 odd rupees, will get one share each of APL Apollo, which is priced at about 1065. So if you're an Apollo Tricode shareholder currently, you stand to get an APL Apollo share. Now, also keep in mind, viewers, that we know that Apollo Tricode will start off higher. In all probability, APL Apollo might come off a bit as well. But the arbitrage is that, and if you are willing to play that game, if Apollo Tricode is 924, APL Apollo is 1060 or thereabouts. So they need to converge, right? Because you're getting one share of Apollo Tricode for one share of APL Apollo. So for somebody who's willing to hold on to that group stocks or is an investor in Apollo Tricode or APL Apollo, as long as there is an arbitrage, it's worth buying because eventually you get it at a slightly lower price. So you have to keep that at the back of your mind. That's the kind of trade that might happen too. But suffice to say, one safe assumption, Apollo Tricode will move up. Or APL Apollo could come down, but I would presume Apollo Tricode will move up. So that's the first of the names, the most obvious names. And therefore, I just thought I'll explain this whole piece to you. Tata Motors is interesting because JLR is saying that it remains committed to consistent, competitive, cash accretive growth and to deleverage the business. The pickle is that they will take a non-cash charge of about £1 billion in the quarter ending March because of higher previous spending and shelving of some projects, etc., all of that. However, brokerages seem to have come out enthused of this meet. Let's wait and watch if this one, after having a fairly decent last 6 months, can it do more? Difficult to say, but let's wait and watch. Ashok Leyland has joined the list of companies who might be associated with a SPAC. Or some of you might have heard of a SPAC, SPAC. There's a gentleman in the US called Chamat Pahilapithia, who's been the key advocate and proponent of SPACs. They are essentially units in which a company can eventually merge and get listed without the formal IPO process. This is only in the US, but the beauty is Ashok Leyland says that the company's hired bankers to evaluate, a possible merger of its UK subsidiary, Switch Mobility, with a SPAC. So, well, interesting moves abound. Let's see if it has any impact on Ashok Leyland. I think I'll watch out for Cholamandalam Investment and Finance. Morgan Stanley's come out with their overweight rating, a target price of 625. So that's about a 20% upside, if I'm not wrong. So Chola Investment and Finance should be one stock on your radar too. And last but not the least, again, a viewer that apologize profusely for lack of some key supports, but there's some technical glitch because of which I'm not able to bring it to you today. Lastly, Bharti Airtel. There is a bulk deal that happened, 3.79 crore shares at about 556 on Friday. The key is both Bharti and Vodafone might have a bit of a cloud because Jio has unveiled new plans, new 2G plans. And those 2G plans give an indication that Jio is not done with the price war as yet. Now, this should be viewed slightly negatively for Airtel, I would presume. The stock has come off a little bit from those 610 levels when their MSCI news came out to about 556. So that's near about 8-9% correction from the recent peak. But Bharti Airtel is a difficult stock. And I think I saw the Jefferies note which said that they are downgrading the stock to a hold from a buy with a target price of 600. I think some others might follow suit, despite Bharti's internals looking strong. But I think the key problem could also be with Vodafone Idea. And V has a fair degree of lower end subscribers, and they might all think of moving to Jio. That's what the brokerages are saying. So be mindful of V or Vodafone Idea in the session today. Lastly, what stood out for me, I think a very simple point expressed by Warren Buffett amongst the multitude of points in his letter. I urge all of you, if you don't have access to the letter, or if you're not a long format reader, there is a wonderful story on our website, BloombergQuint.com. You can read this story as well. But should you want to read more, there is also a button out there which takes you to the letter itself, and you might want to do that too. However, in a nutshell, one thing that Warren Buffett says, and I quote, is that productive assets such as farms, real estate, and business ownership produce wealth, lots of it. Most owners of such properties will be rewarded. All that's required is passage of time and a few other things, essentially saying that if you are an holder of equity assets, be patient with economy growing, and if the business is sound, it will create wealth for you. Don't be in a rush. Don't do too much of transaction, and you will eventually create wealth, which is better than the fixed deposit that you make. It's a very good letter. I urge all of you to read it. And if you are not, as I said, a patient reader, try and read the story on our website. But more importantly, from today's session's perspective, Vodafone might be a bit negative. I'll watch out for Apollo Tricode for sure. That'll do well. And simple math. And auto stocks would react based on how the auto sales numbers come out, starting at about 905 or thereabouts, when Escorts and Bajaj Auto, I think, come out. So do watch out for those names. Thanks so much for tuning in today. Have a great day ahead.